Coming up, we preview next week's RBA interest rate decision. AI mania continues as the Nasdaq hits yet another record. And we take a quick look at Elon Musk's potential huge pay deal. That's next. It is your daily 10-minute business and finance news wrap for this Friday, the 14th of June, 2024. The Australian share market did fall today, down by 0.33% to 7,724 for the day's market action. I spoke with Poole, the Chief Investment Officer at Oreana Financial.
I think it's just giving up a little bit of the gains we saw yesterday following the big US rally. And really, it's probably a little bit reflective of slowing Australian growth and the fact that the RBA looks more likely to leave rates on hold for a longer period of time than perhaps the Fed will.
Okay, so you've mentioned central banks there. It's been a big few weeks for central banks around the world. Cuts for the ECB in Canada, the US on hold this week, but pointing to at least one rate cut this year. As you said, the RBA next week. What's your take on global rate moves?
I mean, we've seen those first cuts come through, and that really is reflective of the fact that growth is slowing, inflation is trending lower, and central banks want to try and avoid a messy economic outcome from holding rates too high for too long. But this is going to be a challenge because we see the Fed wanting to hold rates at those high levels for some time. I think the RBA next week will point to that same issue. The difficulty is this is central banks trying to engineer a soft landing, trying to get rates down low enough to prevent a recession, but that is really rare historically. So they've got a tough job ahead of them.
The Nasdaq, the technology-based Nasdaq in the US at a record high. Apple has done particularly well this week. How do you feel about the sector, especially AI? Is it worth the hype?
But I think in the long run, AI is going to be really beneficial to productivity. It is going to be where a lot of the growth comes from. But in the near term, we just haven't seen all of this capex, all of the spending that has gone into AI deliver returns for most companies. Yes, a few of the mega cap companies have done very well from it, but more broadly, the numbers aren't showing any payoff yet. So we're going to need to see that come through, I think, before investors really support AI.
The other thing I found interesting over the past few weeks, speaking of the Nasdaq, which is at a record, the S&P 500 in the US is also at a record, but the Dow, which covers the top 30 companies in the US, is lagging. What do you make about that? The fact that larger companies, given the Dow, aren't performing as well as those smaller companies that may be in, say, the tech sector or on the S&P 500.
A couple of things are going on here. When you look at some of the price movements over the last few days, it's been one or two of the really big mega cap companies that have driven the broader index higher. When you look at the long tail of all the other companies, they've actually not performed that well. And this narrow breadth of returns has been the case for the last 6 months or so. We just aren't seeing some of the really small caps grow. And so when you look at the discrepancy between the S&P 500 and the Dow, there's a few technical things happening here. One is the Dow is a price-weighted index, and the S&P 500 is market cap index. And that is driving some of that dispersion. And I think it's going to be really tough for returns to drive out into the smaller cap companies, given that growth is slowing.
And given we're talking about the US, I'm not sure how much detail you can go into it, but Tesla shareholders approved a huge pay packet for CEO Elon Musk. I think it's $56 billion worth of shares. Of course, it still needs legal approval. Here in Australia at AGMs, approval of remuneration schemes seem to be getting a bit of a backlash, or it's a little bit tougher to get through. Why do you think that is?
Yeah, it has been an interesting trend to follow. And I think partly this reflects different outcomes in Australian equity indices versus the US index. When you look at the ASX 200, for example, over the last 3 years, since about April back in 2021, there just hasn't been a lot of upwards movement. We've pretty much traded sideways over 3 years. And that means that investors will perhaps question higher pay increases. And if you look out over the next 12 months for the earnings outlook, it doesn't look that great. So there's probably some pushback coming through there.
Okay, locally commodity prices have generally been softer this week, especially iron ore. What do you think this says about the global economy, particularly China?
This is important, I think, because when you're seeing commodities just give up some of their gains, it does support the view that generally growth is starting to slow and that interest rates are restrictive at these levels. So that is important for Australia, particularly given some of the weakness we've seen in China. If you add this together, some slight weakness in China, particularly in the housing sector, broader weakness in the types of commodities that Australia exports, it doesn't bode well for Australian growth out over the next 6 to 12 months, we think.
And finally, where do you see the opportunities for investors at the moment?
Well, when we look across a lot of asset classes, we think that broadly, government bonds still look to offer pretty good value. You've got yields that are relatively high, and they're providing some really good downside protection in the case that the global economy does roll over. And now that we've seen those first rate cuts from central banks, it might be an opportunity just to shift out of cash or very short-dated government bonds to something a bit further out the maturity curve. What we're a little worried about, on the other hand, is global equities, which are looking at pretty stretched valuations, given that growth is slowing. And we think it's really not the time to be chasing rallies at the moment.
That's Isaac Poole there, the Chief Investment Officer at Oreana Financial. This SBS On The Money stream is provided for informational purposes only. The content in this stream should not be understood as constituting advice or a recommendation. It is not personal advice and it does not consider your personal circumstances or objectives. You should contact a licensed professional before making any financial decision.